Shanghai was up almost 6%, 5.7% to be exact, as the Chinese government basically said it was a good time to buy stocks. Their state-run newspaper ran a front-page editorial that said that after the pandemic, a healthy bull market is very important to the Chinese economy. Kind of go ahead, people, and buy the market. Other Asian markets were also up. Japan was up 1.8%. Hong Kong was up 3.8%. And India was up 1.3%. We'll take a look at the EEM, which has 40% in Shanghai, getting a boost today. Turning to Europe, we had some mixed data. Eurozone May retail sales did jump more than expected. They went up 17.8% versus the estimates of 15, but they're still down 5.1% year over year. Germany's May factory orders jumped 10.4%, but unfortunately that was less than the estimates they wanted to jump of 15%, but it is up from the previous reading, which was negative 26%. Domestically, moving to Punditville, that's the place where high-paid analysts say what is going on. There was a couple of calls over the weekend. Let's start with Goldman Sachs. It now says that they expect a weaker rebound in the third quarter. As they said, local leaders will impose fresh restrictions on activity and consumers show sign of caution. So Goldman predicts now that the U.S. economy will grow at an annualized rate of 25% in the 3 months ending in September, as opposed to their previous estimate of 33%. Now over at the other big investment bank, JP Morgan, their analyst said the amount of money that has been created so far in the pandemic is about the same we saw during the financial crisis of 2008 to 2009, but it has occurred much more quickly, as we all know, in just a few months. And what they said was, we believe the total money or liquidity creation could exceed a total of 15 trillion or more globally by the middle of 2021. And then they went on to say, given how low bond yields are at the moment, they expect that most of this liquidity will eventually be deployed into the equity market. So kind of bullish commentary from JP Morgan. Domestically, just trying to see here, the big is the ISM June non-manufacturing report. We'd like to see that number over 50, which would be expansion. The estimates are for a 49 print. I can't see it right now. It's coming out just now, though. All right, with that, let's go to stocks in the news. So let's start off with Berkshire Hathaway. All right, so the Wizard of Omaha hasn't been doing that great lately, but here is the news. So as you may know, Berkshire has 137 billion just sitting in cash, and they have not been deploying it. However, over the weekend now, they did announce that they are buying the gas transmission and storage segment from Dominion Energy for 9.7 billion in cash. What they'll get for that is 7,700 miles of national gas storage and transmission pipelines and about 900 billion cubic feet of gas storage. So Dominion will end up getting 3 billion because of that 9.7 billion they're getting paid. 5.7 billion is acquiring the debt of Dominion, and also there's some taxes that need to be paid. So, Berkshire has not been doing that well in the rally, obviously. Just range bound here. Got a little lift today. We'll see if it can go. Short-term support here is at 261. Let's take a look at Dominion Resources. So interesting. The market doesn't seem to think it's a great idea, or I don't know, but it certainly has broken down based on the news. Looks like it could drift down into the area of 76 and a half, something like that. Um, it was trying to form a triangle here, but now we've busted out of the lower edge. Let's just draw that triangle in there. So here was this triangle, but now it is busted through it. If you're going to use the measured move methodology to figure out how far it could drop, we could look at the height of the triangle. So that's 87 down to 87 points. Puts a downward target here of 73. Somewhere in there. All right. Let's take a look at Uber. Next stock in the news. All right. Fading a little bit from the open, but still up. News here is they are spending 2.65 billion in an all-stock agreement to buy Postmates. So trying to get, they didn't get Grubhub, so now they're trying to buy this other company, Postmates, in the food delivery business there. So you could say that we had a kind of a downward channel going here, but now breaking out. So this looks like a bullish chart pattern. Back, we'll have to see if today's news will let it close back above the 50-day moving average. That would be a key level to keep your eye on. Also, we have the 20 and the 50 right there. So it'd be interesting to see how this one closes, but has a chance since broke out of this short downward channel. Okay, let's take a look at Becton Dickinson, BDX. Rallied into resistance at the 200-day moving average. You could say it's attempting to break out of this little 6-week trading range. I think we talked about this one before, that the 200-day was going to, get that breakout really going, you'd have to get back above the 200. But you can see we've already looked at this one. The measured move from this range here would be 271, but there's a lot of congestion in here, so it might have a little tougher going doing that. The news on them was the FDA has granted emergency use for their rapid COVID-19 test that can deliver results in 15 minutes. All right. All right, Jen. All right, so so they are, they were going to get taken over by Thermo Fisher Scientific for 11.5 billion, but since a major shareholder now is saying that that is not enough, that they should raise the price because of their coronavirus testing products, there's been a huge slow in demand, so the company is more valuable. What we have here is, though, a classic symmetrical continuation triangle. Now, again, when it's a takeover candidate, it's going to trade more on what people think the deal price should be as opposed to chart pattern. All right, let's take a look at Spotify. All right, so you see we've had the flag formation that we've been watching. We did get a breakout on last Thursday. We're still in it. And the news here was they were downgraded though at Bernstein to market perform. Excuse me, to underperform from market perform. Remember, they popped up there when they were expanding their podcast business, but Bernstein said that while it's a nice product, it's not going to add much to their bottom line. But the chart still looks very favorable on this one. If you were going to say this is a classic flag, 183 to 271, that's almost 100 points. No. Who knows if it'll do that? Let's take a look at the, I believe this is, yeah, all-time high. So probably asking a lot to put on another 100 points, but certainly that's what the measured move would suggest. All right. Harley Davidson. So this is certainly not one of the stronger stocks out there, although the bulls would say, well, at least we've held the 50-day moving average and we are making now maybe a little breakout of the shorter term downtrend line that we had. The fundamental news here is they were upgraded to buy at Citicorp. They said the valuation is attractive and it could be a turnaround candidate given the fact that they have a new CEO. Let's do Tesla. What are you going to say? All right. Okay, so the news on them. Barron's had an article over the weekend that said California's advanced clean truck rule that they have out here will be positive for electric vehicle producers like Tesla. Also, here's a little bit of, if you want to say, market fun. So David Einhorn, as you know, is a hedge fund manager who has a big short position on Tesla. And so Elon Musk sent him a whole batch of shorts, I guess, to kind of to rub it in. So this has the highest short number of shares out there as far as market value. $18 billion of shares are short on this one. They must be screaming with today's move. All right, in the biotech space. Okay, Regeneron had it's a nice uptrending chart. I think intermediate traders would watch the 50-day moving average on this one. All the pullbacks to there, if it gets there, have been bought up. The news on them is they announced the initiation of phase 3 trial of a COVID-19 treatment. But their treatment is an antibody cocktail, which can be used for both prevention and treatment. So good news there that they're moving along with that. Immunomedics. Nice gap higher. They have announced a positive phase 3 trial for a breast cancer treatment that they have under investigation. So good for them. Up on news. Let's just see the weekly. Yeah. See, Nice high volume on this breakout. Again, when you have these gaps up, you want to watch the low of the day of the gap up as potential support. All right, let's take a look at some analyst actions today. Kimco. So this is a REIT. They are in shopping malls. So remember, there is some issues, obviously, with shopping malls having less traffic and people being a little bit maybe less inclined to go in there in an indoor space. But Kimco deals mostly with outdoor shopping malls. And Deutsche Bank put an upgrade on them from hold to buy. Another analyst action. So nice looking chart here. Here's your classic cup and handle, everybody. So let's draw it in there for you. Let's take off everything and draw it in. Cup, handle, pivot point. So this was the early buy signal, it's continuing to go higher. If you want to use IBD's methodology, they would say hold it until it's up 20%. So really moving here, it's on an upgrade from Citicorp, put them as a buy. Interestingly, hard to ever see sells, but Intel, Goldman actually put a sell on Intel. I didn't have time to read the whole report, but you know, very rare that they downgraded Dow stock. Also, over at Imperial, they downgraded Netflix. Market doesn't seem to care that much, though. You had a cup with a high handle here. There's the pivot. Okay, the news on them was they were downgraded from outperform to in line over at Imperial. All right, we talked about Spotify, so that's about it for the individual stock action. Let's move over to the indices. All right. Well, here we go. The breakout of the continuation triangle on the S&P continues to move apace. So let's see where it might get to. So first key level that we could run up to perhaps would be 3250, which would be where we started our waterfall decline. It's going to be first time resistance. It's also the previous high that we got up there before. If we can break through there, does the measured move look like we could make an all-time high? Let's try to figure that out. So we have 2950, 32, 50, 100 S&P points, 3115 would be 3215. Excuse me, 3350. No, what is that? Yeah, 3215. So it wouldn't put us at an all-time high. So I have a question on the cup and handle. Is the pivot point always higher than the left side of the cup? No, usually it is lower. Uh, that's why they call it a high handle. Actually, that is a little bit weaker formation than if the pivot was below the left side of the cup. Okay, we have a question from Marion in Indiana. When IBD says sell from 20%, does that mean from the top of the handle on what's on tandem? Okay, what they mean is 20% from the breakout pivot. So that would be right here on tandem, 93.52. So 20% there. Another way that some people, you can also look at the, for a measured move on cup and handles, you can also look for the depth of the cup. So in this case, that's 75 to 91. So 75. So that's about what, 17 or 18 points. That also is about 20% from 91 too, which is about 18 points. So they're kind of matching up the 20%. You can also sometimes, you look at the depth of the cup to get a measured move target too. So 107 or so would be the target there. All right, go back and revisit the S&P then. We got a question. Can you redo the measured move? Scott, just tell me what stock you wanted again, because I think there was two. Or the S&P. So the S&P measured move is 100 points from 3103, 3215, 3210. Be right into this congestion zone. Let's take a look at the NASDAQ. What are you going to say? How to manage risk, though. New highs. Well, first support kind of right in here, 10,128. Let's see if a moving average, you could use that. Let's see which ones are. There's the 20. There's the 10. It looks to me like the 20 is something you would probably follow on this one. Every time it is pulled back, it has been bought up. So there you go. Okay, the question again is on the measured move on the S&P. Yeah, so just do the measured move. Again, it is the height of the triangle. So roughly 2950 to 3250. So 100 S&P points from 3115 is 3215. Right in. Yeah, 3220-ish. So right in here. So but as I said, probably it's going to be that old high there, 3252. All right, let's see if the Russell is catching back up at all. Lagging again. So I think the key level, this did look like a head and shoulders. Now it's more of a range. I mean, I think the key level here to watch would be the high up here that it made a few weeks ago. So let's just see what that high was here. We'll go here. I don't want to do that here. So we'll put our cursor on there and we look at the top and we see the high there is 1473.74. So I think that is a key level to keep your eye on. All right. Let's see. We have several questions on the NASDAQ and the Qs. So let's go back to the Qs. We're talking about an RSI divergence. Yeah, you do have one, but as I said, I'm not quite as worried about RSI divergences when you're still overbought. Okay. Um, we are at 70 basically. So we are still at overbought levels. Yes, I see it. If this was though, much lower than 70, then I would worry a little bit more. But I do see it. But since it's still in overbought territory, it is not quite as worrying. What would I look for as a sign of a top? What I would look for, a couple of things, would be a day when you gap up and then close at the low of the day. That would be a shooting star candlestick. Uh, that would be one thing to look for. Also, let's look at the unbalanced volume. This could give a clue also. Yeah, so another sign of a top would be if we keep making highs in here, but we start getting a volume divergence. And the reason I say I'm watching that is, notice from the basic move that we've had, we've never had that before, right? So that would be kind of a key also. If, we pull back a little bit, make a higher high, or we get a shooting star candlestick and unbalanced volume, uh, starts going the other way over a few days. Or the other thing, if we had a shooting star candlestick with a huge shoot up in volume, just looking at the volume bars, okay, um, and you close at the low of the day, that would be a climactic top. Uh, so that's another thing you could look at too, but we don't have that. It don't looks like we have that. Um, this is going in the right way. So right now, I can't say that the trend is necessarily in jeopardy, but very good questions. Okay, we have a question from Dean in Indiana. If you put a portion of your portfolio in cash when the S&P 500 was at 3,000 with intentions of playing the dip, you hang on or get back in? Well, again, I can't really speak to that because I don't know if it's a portfolio change but just in general, I mean, the trend is still up. What I like to do is just, on down days in an uptrend, buy a little, uh, buy a little as long as the trend is up. Don't try to do all or none. That's one thing. You did say you did a portion, but also, if it's a long-term portfolio balance thing, that's something totally else. That's why you should speak to a financial consultant. But just from a trading perspective, um, maybe add a little bit on down days. Kevin in Nevada is saying we don't have 70 on the NASDAQ. Let's take on the RSI. Let's take a look at there, Kevin. Oops. Yeah, it's at what, 67, where the Qs are basically at 70. Yeah, I mean, that makes a little sense. I mean, there's just more stocks in there. Um, So here, this is a little bit, it does look like the QQ, but it is um, this is a little bit more, this divergence is a little bit stronger than the one we saw in the Qs. Because the RSI is, a couple points away from 70. So, yeah, that is a good observation. Remember, if you want to trade the NASDAQ composite, the symbol is the 1Q. And also notice the last high here didn't quite make it to overbought either. So this is, yeah, I mean, I see it. So if you're worried about that type of thing, which you're still not going to sell when you're making highs, but maybe if you're using the 20-day moving average to manage your risk, and you're worried about that type of diversion, maybe you move to a faster moving average uh, to cut your risk a little bit. So that's one way you could handle it. Because you're right, we don't have a 70 on the overall NASDAQ. All right, let us take a look at the sector action today. And we have some requests for some specific ones, so we'll certainly take a look at those. Let's go and take a look at see what is moving today. The semiconductors looks to be kind of cyclical today. You got financials doing well. Technology always seems to be doing well, especially the semis. Underperforming healthcare, but not by much. But here we have two pretty defensive sectors that are down a little bit. At least the only one's down is utilities, but it is, not doing well, relatively speaking, with XLP. And XLE is lagging just a little bit. Let us take a look at, I think oil is down a little bit before we look at the XLE. Yeah, it's not down much though. Take a look at the XLE. That was the request. Yeah, I mean, it's range bound, which is not the worst thing. A lot of those stocks have pretty good dividends. And, just do some research, see which ones have said they'll maintain their dividend. Someplace you can look. But let's look at key levels here. Let's just take off everything. I'd say the key level here in the intermediate term is 35.5 on the XLE. I think you can see why that is. You'd feel a lot better, obviously, if we could. So we had basically a failed breakout. We went back into this narrower range. So once again, look to see if we can take out 40 on that. Okie dokie. Let's look at the stocks. Let's look at, I said Intel was downgraded, but the stocks break out from a triangle. Okay, so let us take a look at this chart. So this is your horizontal support is an area, 250 to 258, 257. Shorter term support would be the trend line you just broke through. Let's see where the 10-day is too. Yeah, so I think I would use that. If it's going to continue, it shouldn't fall back into the triangle. And let us take a look at the measured move on the stocks, shall we? So 250 to 278, 28 points from 270, 298 would be the measured move. That in spite of Intel not doing too much. I don't know the reason for this, but to your point there, Joel, yeah, lithium is popping. Let's see if it's on volume enough to make us feel happy about it. Let's go to our 5-minute chart. Nice volume pop there. Looks like they were, even though we went sideways on Thursday, it looks like they were accumulating, and now it's popped up. Yeah. So again, you want to watch the low of the day of the gap. Um, Also, look how that is right kind of, I would say that would be a key level in the very, very short term, 33.83. But yeah, it is popping. We want to look at utilities and okay. And let's see what the 10-year is doing. Sometimes that can give us a clue of why they're not doing too well. Yeah, so that's one reason. Interest rates are up a tad. I think it's really also there's a couple things going on with utilities. I think there's a little bit of worry that some people coming the end of July when the all that stimulus for a lot of people ends. Um, Maybe they're going to have a little bit of trouble paying. Um, it could be that. It's also, I would think, just maybe people going into a little bit more cyclical areas of the market too. I would have to say that's probably a couple of the reasons. All right, we got a question back on the stocks, and we wanted to look at the intraday volume on that. So, I mean, right now, it depends. I guess for the last 3 weeks, I use 15 days. We, I don't see an intraday volume too much lower than what we've been having over the last 3 weeks. Now, if you change it to something else, maybe. But just in general, to answer your question, though, if you see a breakout on less than average volume, yeah. So price is still the most important factor. So how do you trade that? You would take a smaller position size, but since price is still the most important thing, you would still be in it. That'd be my answer to that. Okay, let's do our breakout screen. We have 5 minutes. Just say I really like this screen. It's pre-built. You don't have to do any work. Let's take a look at breakouts today. See what's popping up there. So again, this is a pre-built screen. You just click on uptrend breakout with increasing volume. Let me do that for you just to show you. We'll get the same ones, but let me just. All right, so now what we'll do is just click on uptrend breakout with increasing volume. And here we go. Pretty easy way to get trading ideas on the long side. We also have a breakdown screen. All right, so we'll sort it alphabetically, and let's just take a look at some of these. All right, well, obviously, yeah, ABBA, yeah, for sure. Getting a, yeah, mm, Here's where you set your risk. Let's look at the volume. Ooh, nice, nice. All right, so also for intraday traders, watch the 20-period exponential moving average. Right now it's coincident really with R3. Not much to be said there. Now, can you set a measured move on this? I don't really see a very good chart formation to do that with. So in that sense, how do you manage a trade? When you have something without a chart pattern, then you resort to a risk to reward. So if you're going to risk, to 230, then go for more than that number of points in your reward. Yeah, we have some of this pre-built screens. Some of the fields are blank. They still produce results. Yeah, I don't quite understand. I mean, I actually don't know the answer to that question, for sure. Also, some of the pre-built screens, they say difference as opposed to the actual value, but it still works as if you're doing the actual value. So it's a head scratcher to me too, Tom, for sure. All right. Amazon was on there. What are you going to say? Now, again, remember, the breakout screen isn't necessarily just a breakout from a horizontal trading range, although you get a lot of those. It's just, it's stocks making 20-day highs is the breakout criteria also. To see Amgen, though. Look at Amgen. Yeah, quite a move from here. Now here you could set a target. This is also a cup and handle. Let's see if we've already made that target, shall we? So here was the cup. There was the handle. Here was the pivot. So what is the depth of the cup? Oops, didn't mean to do that. So 212. So let's say 34 points. 34, that would be 278. So at least from that point of view, have a little bit more room on the upside. Okay. Let's see what else is on that list. Yeah, I'll just make sure Google is on there. Somebody wants to look at Google. Yeah. Ah, this was a horizontal trading range. Okay, the range was basically 1377 to 1477, 100 points, 1577. But you'd have to think that there would be a pause at those old highs of 1527. But that would be the measured move on that one. All right, and with that, our time is up. So coming up next at 12 p.m. Eastern, Spotlight on Futures with Director of Charles Schwab Futures, Mike Zaremski, and special guest, Bob Iacchino, who is Chief Market Strategist for Path Trading Partners. I will be back later. They're working me to death again. I'll be back at 1 p.m. Eastern for Charting the Markets, and then after that, I will be up with Ichimoku. So stay tuned.
Introducing Schwab Stock Slices. For as little as $5, now anyone can own companies in the S&P 500, even if their shares cost more. At $5 a slice, you could own 10 companies for $50 instead of paying thousands. all commission-free online. Schwab Stock Slices, an easy way to start investing or to give the gift of stock ownership. Schwab, own your tomorrow.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab, the gut check you want, the intel you need.
Hello, and welcome to the Quick Start video for the options chain available on Schwab's StreetSmart Edge platform. Let's load the options chain. It can be found in the all-in-one trade tool as well as Symbol Hub. For now, let's load the all-in-one trade tool and click on Options Chain. In the main lower panel, the chain loads with basic information about each option in the chain, like call or put, the symbol, last trade, the change, bid-ask, the midpoint, volume, and open interest. You can add Greeks, probability, or other quote data in the Manage columns and Settings page. It can be accessed through the Actions dropdown or through right-clicking in the chain and selecting columns and settings. For simple calls and puts, click the arrow at the beginning of each row to display the available contracts for a particular expiration date. For more details about each option, click the arrow next to the contract to display the contract specifications along with other data. When you've selected a multi-leg strategy to trade, click the arrow at the beginning of each row to display the legs in each set. The Option Chain Filters row allows you to determine which contracts or pairings are available for you to view and choose from when setting up an options trade. The filters include Strategy Selector, Expiration Filters, Number of contracts or pairings to show, and when applicable, Width. These filters help to narrow down the chain to find the contract or pairing that meets your criteria. To remove adjusted options out of your option chain's display, you'll need to uncheck it in the option chain setting. You can filter weekly and quarterly options here as well. Trade directly from the option chains. Be sure you're in the Strategy Selector tab. Once there, all you have to do is click on your strategy of choice. The trade ticket updates to your strategy, and the contracts or eligible pairings will display in the option chains below. Click on the contract or pairing you want, and it is loaded in the trade ticket above. This sets up a limit order set to the midpoint price for that strategy. However, feel free to change that price to whatever you would like. In the Action field, choose whether to create a buy to open, buy to close, sell to open, or sell to close order. Max gain, break even, max loss, and estimated cost calculations will be displayed depending on your action. Lastly, we have the Views selector, which includes Theoretical, which is a view of calls and puts that allows you to select a Greek model and make changes to the different parameters that affect option pricing as calculated in that model in order to see how those changes would affect the prices and Greeks in that chain. And Covered Call, which shows calculations for covered call or covered put transactions. The Covered Call calculator gives traders an idea of how a buy right might work for or against them at expiration based on what they paid for it and where the stock price was at expiration. These are both estimates based on a mathematical model, but it can be used as a baseline for planning an options trade. This concludes the Quick Start Guide for the options chain on Schwab's StreetSmart Edge. Please check out the Learning Center and the Online Help menu, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.